Hi, welcome to the Market Alert for Wednesday, the 22nd of March 2017. So let's just do a recap first before we get into the trade from yesterday. Let's start with the bigger picture. First of all, as you would have seen in the Market Alert on several occasions, and also a separate video that I recorded about the pros getting out of the markets, they started doing this in December, managing to run the market up as well. This is the weekly chart. You can see prices rising there, but the volume massive, and also in the monthly chart the highest volume since 2009, which you can see there and there. Nothing all the way through the QE phase to shout about, and then all of a sudden we get this big spike in volume. The markets moved higher to draw in the weak traders, the general public that is, and then they start to dump it, which is what we're seeing yesterday. Also, again, the best tool that we've got is the implied volatility to predict the end of a move and a correction en route. We looked at this yesterday. I spoke about this point here and what happened there. We then had the rally with the implied volatility coming back down again, and now we're seeing the market starting to sell off there as well, because that's exactly what happens each time you've got it there as well, except in this situation what you've got to look at is the bigger picture. And I keep saying this, they don't like Trump. It's getting worse by the day for him, and anything they can do to make it look bad for him, they are going to do it. And now it looks like we've got this situation coming in the market where it's gone from optimism to a state of we don't know what he's going to do, if he's going to do it, the tax reforms, the infrastructure spending. We all know that any politician's promises are always broken, because at the end of the day there's always an issue of money. Also, the debt ceiling came into effect a week today as well at the 20 trillion mark, and there's only several billion in the pot until that runs out, and then he has to go to Congress. We've got the Brexit to be signed, or the Article 50 to be signed a week today, so we can expect more volatility coming into the markets going forward, and the volatility is going to be to the downside because of what's in the background. That's the important thing here. So yesterday, let's have a look. You join the trade here with the market already having gone through the scalp, and what I've been doing is trailing the stop as the market started to fall. It was looking weak, and there was no news to bring the market up, so there's weakness around, and then we started to accelerate once we got through the second sell signal there. So the market then continues to move. I'm just going to release the screen, and there we see the market putting in a buy signal, and you'll see I'll redraw everything back on in a second. There you go. So you've got a situation now where we've got these lower highs trailing the stop. The market's moving lower, and what I'm doing here is I'll just play this, is having a look to see where the market's lows are, what it's got to take out. I'm looking at the bigger picture to see where the market's going to actually break, and you can see there is the 20,712 level. So then I'll switch back to the intraday chart, come back and check, always looking to see where the market's going to stop. And here what I've done just at this level is drawn in a zero extension there, just to see if the market's going to break through there. It's found a bit of support. It hasn't taken out the trailing stop, so I'm looking to see if the market's got the momentum to take out the recent low, and then down to the 20,700. So I'm now moving the stop again, and there you see the trade taken out. So that was the trade for yesterday. There's weakness in the background. Look at the background, you'll see you'll be able to formulate the opinion of the market, what it's going to be doing. Like I say, the optimism phase is over for Trump, and it's now time for the market to put in the correction. Now, it isn't going to be a straight down correction. It's going to oscillate. Hopefully, it's going to be a controlled demolition and correction. And what I mean by that, if we go to the daily chart, let me just again release the screen. What we've got here is the market taking out this level here yesterday. We've got a long way to go down to the next level. We've got all of these in between as well, so if you want to draw in, you can do. Just take a zero extension and you can do this to find the next level of support. You don't have to keep all of these on the screen. What I would do is, just as the market heads down towards these levels, is just to draw these in as you go. So for example, you can just do this by using the cursors coming across. There's the first one, there's the next one, and then do this. And that's what I did in the video and showed yesterday. As the market moved lower, I come back and I check and see where the next level of support is, and then mark that up accordingly. On the news front today, we've got crude oil inventories. That's all that is going to be out during the session. Existing home sales come out at 2 p.m. Which again you can really ignore. Crude oil is an interesting one at the moment, because if we have a look at the crude oil chart, you can see that the market's been selling off a bit on this one for the last few days. The market was starting to bounce a bit there, but now is heading back. And again, you've got this situation here. Will crude oil break through that? If it breaks through that, then that's going to add more pressure to the downside. Crude oil inventories out later. See how the market affects that as well. Also noticed that in the precious metals, this is the silver market. This is now moving higher following the correction. The correction came about because there was speculation that interest rates were going to increase. They did increase. Now, this is unusual as well. This is very unusual that the precious metals markets are starting to move back to the upside with an increase in interest rates. That normally doesn't happen. Because the precious metals are seen as a hedge against inflation, and yet precious metals are moving back to the upside. So what they're showing is uncertainty in the markets. So again, that ties in with the implied volatility at the record lows, and also the stock market starting to sell off, the lack of confidence that is starting to build with Trump also. And talking of implied volatility, yesterday the market moving higher. I'll show you the 992, and that's consistent with the market starting to move lower. And then in this chart here, you can see we've gone from the 834 that we had yesterday, a big spike there, starting to move up in the implied volatility. So the low that we were looking for over here at 815 isn't going to happen anytime soon now, because the bottom is in. But again, as I said earlier, this for me is the main reason that the market, this here, these lows, once the market gets down below 10%, you are going to get some form of correction in the market, and that's what we're starting to see now. Right, that's it for today. We'll see how the market pans out in the pre-market session. No doubt probably find some support in the earlier parts, so they don't want to let it fall apart too quickly, too fast. But certainly heading now for an interesting time, I would have thought, unless the plunge protection team have other ideas, but at the moment I would expect that to be the case. Also, just before we finish, let me just go back to the 5-minute chart. As I said in my message yesterday, you've got the big trade. It's the first hour or two, and then you will start to see failures here, because they're going to bounce the market. They run the market back down to, just switch that off for a second. Let me just grab a blue one. They run the market back down to this level then. So going short here when you've already got this support is dangerous, especially when you've already had 200 points on this side. Then the buy side is failing miserably. The plunge protection team didn't come to the market's aid yesterday. That doesn't mean to say that they won't, but there's again confirmation there that they're just letting this thing go at the moment. Let me just release remove these extensions, and the markup, it's still activated. There you go. Now I can drag this across. So on the overnight, you can see the market is range bound. One or two spikes of selling there, but nothing to be concerned about. And the market's trying to come back at the moment, but the volatility is certainly building, and about time too. So in all of the market alerts where I've said about keeping your gunpowder dry, this is the times that you've actually saved this for. Right, that's it. I will see you or speak to you later, and as ever, thanks for watching. See you in the next one.